The title of this slide looks familiar. It should, because Mobileye used to be a publicly traded company. There's an Israeli firm that had an IPO before, and then they were acquired by Intel. And what we particularly like about Mobileye is that their technology is very niche specific. And that becomes relevant when you look at the BCG matrix that every MBA is familiar with. You take a company like Illumina, they would probably be moving towards the lower left quadrant. They have a cash cow, their sequencing machines, a high relative market share, very high, somewhere around 80%, and a lower market growth rate. And when growth stalls, the idea is that you start moving into adjacent verticals. So you'll see a lot of LiDAR companies talking about how they can address every single use case under the sun, but they're not actually addressing any single one. And to get traction in a particular vertical, that allows you to do a whole lot more. And that's what we see Mobileye doing. So we first wrote about this company somewhere over 7 years ago, it looks like. They completed their IPO in 2014. We went long shortly after writing this piece in June of 2015. And in 2017, Mobileye was acquired by Intel for about $15 billion. And that did wonders for the company. They were able to grow their revenues at a compound annual growth rate of about 27% over the past 5 years. And here we've charted that out. So we have the financials from before that you can see in blue here. And on the right-hand side, those 3 blue bars are their most recent numbers from the S1 filing. And we just plugged in the values in red as an estimate of what their growth looks like. And it's phenomenal. So when you look at their flagship hardware product, system on chips is what SoC stands for. And the EyeQ SoC is what they're selling a whole lot of. You can see here that the increase in units in sales accompanies that strong growth in revenue. And when we look at their technology platform, you can see that there's more to it than just hardware. You have this crowdsourced mapping that we'll talk a little bit about, and this true redundancy element where they want to start using LiDAR with computer vision. And it's all quite sophisticated and mature, especially when you consider companies like MBLY that are just trying to get into this. So here's an example of one of their latest technologies. You can see this Mobileye supervision for advanced driver assistance, ADAS. They have 11 cameras that are processing data into these 2 EyeQ SoCs, and it's all rather sophisticated and advanced, and it's exactly the direction that we need to go if we're going to achieve autonomous driving. Here you can see where they have this concept of road experience management, similar to how Tesla has their drivers out there collecting data for free. Anybody that owns a Tesla, their car is collecting data. Well, here you can see that Mobileye has 1.5 million vehicles out there that are equipped with this REM, this road experience management, and they're able to create maps. And then in turn, they have 2,300 individuals that are annotating these, and they're putting together this, what's called a cloud enhanced driver assist. So it learns as it goes along, and data eats the world, of course. And this is the basis of ARC's thesis on Tesla, and why they're able to ascribe such high price targets is because they believe Tesla has the advantage here. And Mobileye is pretty impressive as well. So they're accumulating approximately 100 petabytes of data every month. That's a lot, processing it with 500,000 cloud CPU cores. Again, they have the humans in the loop to make sure everything's being interpreted correctly, correcting the AI algorithms, 8.6 billion miles of roads from their 1.5 million vehicles. And in the United States, they cover about 90% of motorway, trunk, and primary road types, and 80% in Europe. So they're really making some headway. Now, when it comes to leadership in ADAS, we like what we see. They have first mover advantage. They launched with their customers in 2007, whereas you have other firms talking about launching now. They've been at it for a while. 80% of their employees are dedicated to R&D, huge R&D spend, and they built their full stack from the ground up, first principles design, sort of creating what was needed. And that's resulted in this portfolio of solutions they have outside of just hardware. They have this Mobileye chauffeur that's going to allow human drivers to have hands-free driving. And then they're of course, fleet self-driving system they're working on. And then this is really interesting. MoveIt was a firm that was acquired by Intel. We'll talk about it a little bit later. That now belongs to Mobileye, and it's used by 1.5 billion people for public transport. So that's an interesting opportunity to overlay that with some autonomous transportation. And of course, they're very agile and they're able to iterate a lot on their product over time. I think they're on 5th generation, and that gives them inherent cost-driven advantages as well. Now, when you look at the opportunity, again, these things are to be taken with a grain of salt, but today it's somewhere around $16 billion for ADAS. And Mobileye claims they can get about 5 of that. And then by 2026, it goes to 40 billion. And then, of course, long term, by 2030, they see that to be $500 billion. Again, this is similar to ARC's thesis in that they believe autonomous vehicles being deployed, whether that's owned by consumers or fleets, will represent a massive opportunity. Now, of course, there's some not so goods here. Companies aren't contractually obligated to buy these components from Mobileye. So Tesla used to utilize their technology, but they transitioned to their own in-house ADAS solutions. Mercedes-Benz also employing in-house solutions. And you have other firms like GM and Volvo that are also pursuing various components of their stack in-house. And there's also some concerns around suppliers. So ST Microelectronics, a short ST Micro, is the sole supplier of EyeQ SoCs, and they haven't been able to meet demand, causing a significant reduction in inventory. That means that essentially Mobileye has no inventory, and they need to ship to consumers, or let's say customers, only as fast as ST Micro can produce. So there's also this dependence on Taiwan semiconductor manufacturing company via ST Micro. So that's certainly putting a crimp on Mobileye. It will be interesting to see how that impacts their revenues this year, because they expect to continue having a shortfall of chips during the second half of this year as well. Now, another problem here is customer concentration risk. You can see here the picture on the lower left here shows their customer concentration risk in 2014, and it hasn't changed much. They had 73% of revenues coming from 5 customers in 2014, moved to 2021, and 70% of revenues roughly come from 3 customers. Good news is that 74% of their total revenue in 2021 came from outside the US, with China, Germany, and UK making up about 50% of the international revenues. So going back to MoveIt, Intel paid $900 million for this app in 2020, and it services 1.5 billion users globally across 112 countries, 3,500 cities. And what they plan to do with that is start to plug in an autonomous transportation solution. So that's very exciting, and part of the thesis where Mobileye moves beyond just being a hardware provider, or let's say full stack provider, into offering their own services. So when it comes to survivability, that's a big focal point right now. They plan to raise about 2.5 billion from this IPO, but those proceeds are expected to pay down this dividend they owe Intel. It's all rather confusing, and it's almost as confusing as trying to understand how Mobileye managed to get stuck with $10 billion of goodwill on their balance sheet, which is supposed to be from the Intel acquisition. All rather odd, and a good reason to wait for the dust to settle with this IPO before analyzing it any further. But they had 47% gross margin in 2021, very strong, 774 million in cash, with losses of 75 million in 2021 compared to 196 in 2020. That means they could survive for quite a while, let's say 9 or 10 years. Now, very quickly, when it comes to what success looks like, all the LiDAR companies out there touting products with no revenues, this is what we're looking for. Look at this on the top. 5 generations of products over 14 years, and look at the sales below that. They're building what customers want. There's no build it and they will come bullshit that you see from a lot of these LiDAR producers. So just to conclude, we're waiting for the IPO to happen. It may not. Hopefully it does. Intel knows what they're doing. They'll remain a majority owner of shares with no intention to change that following the IPO. We're going to wait for the dust to settle and a post-IPO financial filing that we can look at. Then we can assess valuation just based on what expectations are. A $30 billion valuation would be a simple valuation ratio of around 16. That's still quite high, but you can read more about that in the accompanying research piece. I'll put a link to that in the description of this video. Please put your comments in the comment section, subscribe to our channel, share our video. Thanks for taking the time to watch this today.